Anyone who's ever done banking the old-fashioned way would know this all too well. You have to physically go to the bank, which is open during limited hours, fight for a parking spot, walk under the hot sun or rain to get to the bank, queue up with other people. Well, you get the idea. The process can be very time-consuming, tedious, and at times even frustrating. So much so that Bill Roberts, the head of open banking at the Competition and Markets Authority, once joked that people would rather change partners than banks. It doesn't have to be that way though, not with the technologies available to make banking simple, seamless, and streamlined. And that is exactly the premise and promise of open banking. A modern way to bank in this digital first world. Open banking, also known as open bank data, is a banking practice in which banks and similar financial institutions grant third-party financial service providers access to client data via application programming interfaces or APIs. Such access, to be clear, is given only with the client's consent and when given ensures interoperability. It also facilitates easier, faster, and more secure interbank transactions. In other words, it strips away much of the complexities of banking and makes it simple, seamless, and streamlined. Consider, for example, the following use cases. Open banking lets you switch your checking account from one bank to another bank, but without the hassles that would otherwise come with making such a switch, like an account opening process itself and the validation of documents. Open banking analyzes the transaction records of clients and recommends financial products and services that are most suited to them so they can actually optimize their financial decisions. Open banking simplifies e-commerce, enabling clients from around the world to send and receive money easily and seamlessly, as it allows for a secure yet frictionless experience from authorizing payments. In other words, open banking is a boon for consumers. They are the ones who stand to benefit from a variety of innovative products and services that are now available at the tip of their fingers. This is made possible by fintech companies that leverage a wide range of modern technologies, including artificial intelligence and big data analytics, to improve the customer experience and deliver better customizations and personalizations for their clients. Bank customers, though, are not the only beneficiaries of open banking. Financial institutions themselves can benefit from it too, and in a variety of ways. Through open banking, for example, a bank will be able to get a clearer picture of a client's financial situation and risk level, thereby enabling informed decision-making when approving or declining, say, a loan or a mortgage lending application. Additionally, open banking can help monitor accounts in order to better detect and prevent financial crimes such as money laundering or fraud. Unfortunately, despite all of these benefits, studies have shown that Malaysia's banking sector is actually lagging behind its Southeast Asian neighbours in terms of adopting fintech and digital banking. In fact, a significant portion of financial services are still set in their traditional ways, while some forms of new and digital experiences are slowly being introduced. This means that for most consumers, the financial services that they will encounter in their lives are still a mixture of new and old experiences. They still have to physically go to different banks or ATMs, open up different apps to check their accounts, transfer money, make payments, and etc. All the money-related services and transactions have to be linked back to either brick-and-mortar banks or online banking. So much hassle. All over the world, these behaviors are changing and disintegrating. Financial institutions are facing the era of modularization and platformization. Rather than being inflexible monolithic entities, with open banking, financial services will become more like a small building blocks, each serving different functions and integrated into various services. Nevertheless, the benefits of utilizing open banking are clear. In a nutshell, by opening up their APIs and extracting the real value and power in financial data, banks and other financial institutions can greatly improve the customer experience, deliver more efficient payment systems, allow consumers to easily compare various financial products and services, and most importantly, provide increased transparency and understanding of finances. While it's still early days for open banking, Many more interesting use cases will continue to emerge as it gains a wider acceptance all across the globe. Over the coming years, open banking has the potential to revolutionize the financial services industry. Organizations that are still holding on to traditional ways of banking will need to adapt quickly or risk being left behind.